With Bill Baruch, president of Blue Line Futures. Okay, Bill, let's start with the simple stuff. Baseline expectations tomorrow. We heard from our guest at the top of the show, 75 bips is likely, but 100 still possible. What do you think?
I don't think we'll see 100.
Okay.
I think we'll see 75, and we'll get a point to another 75 in September.
Wow.
What the Fed's done here in the past several months has come to fruition. I mean, you've seen commodity prices go down. The Bloomberg Commodity Index was down as much as 20%. It's come down from come up off those lows a little bit. We got news that housing prices are coming down here today. You're seeing layoffs starting to come through. So the job market's starting to tighten up a bit, or loosen up a bit, if you will.
So you think they're happy with this outcome so far?
Yeah, I think we're moving in the right direction. And what I'm really looking for tomorrow is the type of acknowledgement from the Fed that would potentially say that they would slow down after this September hike. And that, the market probabilities are saying we get another 25 or 50, at the end of the year, or between those next two meetings. But we're also seeing some probabilities show up that if we get more hikes after September, we will likely get some cuts by the middle of next year. So, yeah, I think if we see a message from the Fed that they're gonna hold ground, but within the questioning, does Fed Chair Powell allude to what they're doing working? And I think that could be extrapolated into taking their foot off the gas as we move into the autumn.
All right. Now, do you think that he will specifically signal that 75 or leave that to the market over the next month to decide? If you think he's going 75 in September, which is slightly, borderline out of consensus right now, does he need to start laying the groundwork for that tomorrow?
I think he'll choose his words very wisely, very cautiously. It could be something, staying the path, with these rate hikes and then reevaluating. Remember, we'll have Jackson Hole as well. And my theme has been this inflation showdown at Jackson Hole. So we'll get the July inflation numbers before Jackson Hole. We're starting to see some of the Cleveland Nowcast show, I think it was, maybe 7/10 on the headline increase month to month or so, which is borderline half of what it was from May to June. So some of this stuff is working through the system, and it's starting to go to at least the right direction. Not trending, but at least it could be a start. And those are going to be more important here in the coming weeks. I think that people are going to wait for too.
Bill, I want your trader take on what I think is probably the most important relationship question right now in markets, which is if we get lower yields from here, do stocks like it or not?
I think stocks will like it. It may not be, so much of an immediate thing. It could be, you got the 10-year 2.7. All of a sudden it's at 2.5, and okay, the Nasdaq's rallying for a couple of days. I think for stocks, really, I like the 21-day moving average, and it's been a good barometer of sort of a shift in momentum. So I'm watching that 21-day, it's down there by 38.75, I think, in the S&P. So really want to see it hold out above there, even if it touches it or goes below it, kind of on a closing basis. Let's close above it, especially on the week.
Okay.
The other thing too is there's some long-term trend lines in the bonds, whether you're looking from a yield perspective or the 30-year bond perspective. I think it comes in a little bit below 3%. And it's a back test for a 25-year trend line, and I think it's about 146 in the 30-year futures. So keep an eye on those levels. If the bonds keep going higher and yields keep going lower, that could be a little bit of an intermediate term floor until we get. If we were to get a higher move in bonds and a lower move in yields through tomorrow, I think that would be something that we're not going to break down more than that or break higher more than that in the prices until we get more of the data through August.